Have you ever entered a trade and you think that you've done your analysis so well, and immediately you enter that trade, everything turned against you? It just started going on the opposite direction and you are wondering what just happened. That used to happen to me time and time and again until I understood market structure. Market structure just means the way the market is moving. And when you understand how the market moves, you are not going to make those mistakes, because you are going to know everything that you are going to be doing in the stock market is going to be a calculated action that you are going to be taking. So today I want to talk with you about market structure, because this is what changed my trading. I used to enter trades. I used to have so many losses until when I understood how the structure of the market is, everything changed from that time. So now look at this on my screen here. So if you look here, this is like a chart, and you are going to see that the market is moving in a particular direction. Then when you see here we have higher highs, it just means that this high, this top here, is higher than the previous high that we had down here. And then after that, there is going to be a pullback. A pullback is just a correction in the market. So what does this mean? When the market is moving, what is actually happening is that there are so many buyers buying, and because they are buying, it's pushing the price of that stock to go up. And so now when it comes here, when it gets to this point, now some people are not willing to pay that high amount of money. So what will happen is that because they are not willing to pay, the price is going to drop. So as the price drops, as sellers begin to sell, now the price is going to drop. Now the price gets here. When the price gets here, now you see that it forms a higher low. Why? Because this low that is here is higher than the previous low that we had down here. Now what happens is that after it gets to this point, those buyers who were not willing to buy at this high price, they are now willing to buy here. So when they buy, as they keep buying, it pushes the price up. And now we are going to get to this other higher high. So that's what happens in the market. And now it just continues like that. One thing that I want you to take note of, which is very important, is that why is it actually going up? Why is the trend going up? Because at this point, you see that at this high, there is a pullback. So now I want you to understand something. I've just inserted this line here. So what does this mean? You see that this line is cutting here. Now, this was coming up and we see that we had a resistance here. But when it crosses here, when price breaks through this line, it comes back and now this line becomes a support. Now, this is how you can know exactly where to enter trades, where to buy. And when this support comes here in an uptrend, now it is just giving us a buy signal. This is when we are going to enter the market to be able to buy that stock. So one thing that I want you to take note of is that this high right here, it comes down, but it doesn't go down below this other high. One thing that I want you to take note of is that so long as this higher low is higher than this other higher low, then the market is still going up. Now it goes up like this, and we realize that this higher high is still higher than this. Now look at something that is beginning to happen. This other higher low still tells us that the market is still going up. But when you come here, you see there is something different. This other high did not go above this high. Something is beginning to change. Now, when you understand market structure, you are going to watch to see what is actually happening now. And at this point, you see that there is a consolidation. The market is shifting. This high that was higher before is no longer higher. See, there is no high here, because normally if it was still going up, another high, this other high might have come up here. Now when you continue, you see that this low is now a little bit lower than this other low here. So there is something happening. And now, but at this point, you still cannot tell if you are still in an upward trend. You can't make that decision yet until there is a change of structure. You see that this low now here is far lower than this other low that was here. And because this low is low here, you have this lower low here. It means that there is a change of structure. This other high here is lower than this other high that is up here. And so from this point, you start seeing lower high and lower low going down just like that. And so that is how you understand market structure. Now, why is this information important? Now, let's assume that you saw this trade and it's going up. Then now it's coming down. Maybe you might think that, oh, the market is going down. You can sell right here. But unfortunately for you, When you do that, you see that it turn and start going back up. Now, sometimes we just look at the candlesticks. When it's red, we see that we are going to sell, and when it's green, we see that we are going to buy. That's not how it should be. You need to understand the structure of the market so that you know exactly where you are entering the market. Now, when it pulls back right here, this is a perfect place for you to enter because you know that this market is still in an upward trend. Now, there are three different kinds of trends in the market. We have an upward trend, we have a consolidation just as we have seen, and we have a downward trend. When it's going up, it is best for you to buy because you have more chances to be able to make money. Of course, you can still sell during the pullbacks, but you just need to be very careful and make a very tight stop loss. During consolidation, it is a very choppy market, but there are also different strategies for you to be able to trade that. But if it's a very small time frame, the best thing for you is to just stay out of the market. And now when the market is going down, it's an opportunity for you to sell. Now that you've understood the concept, let's go to a chart so that I will show you exactly how it happens. So this is trading view. So we are on a 1-day chart. So it means that every candlestick that you see here is 1 day. So assuming that you came and you open your chart and this is how it was. And now let's see what happens. Now the chart is moving like this. We see that the market here had been in a consolidation and now it's starting to go down. Let's see what happens. And now if you come here and you are trading, what I always do is that I'm going to take a trend line because I see it going down like this, and I'm going to draw a trend line just like this. And most of the time I'm just going to clone it and then put it on the other side because this is going to help me to see the movement in the market, and then it just keep going. So I'm just going to be watching, and now we see that it break out of our trend line. See, there is some kind of consolidation here, and then it breaks out of the trend line that we had drawn. Now at this point, there's a high possibility in my mind that I'm thinking, okay, is it beginning to change? Is it beginning to go up? So what will happen is that because this trend line has been broken, I'm just going to start thinking that maybe it is time for it to go up. I'm not very sure because this can come here so long as it had not crossed this one. It might come back down and then the downward trend continues. So let's just play and see what happens. So we see now that at this point, now there is a higher high that is being formed here, and then there is a higher low that is being formed here compared to the previous ones. And now it tells us that actually the trend is changing. So what am I going to do? So when I'm trading, I'm now just going to come here and I'm going to draw my trend line again just like this, and this is going to help me to see exactly how the trend is going. Why is this important? Because you are going to know when there is a pullback in the market, and when there is a pullback, then you are able to take those trades. Remember, this is 1 hour, and the same thing happens with any time frame in the market. So let's just play it and see what happens. Now it continues to go like that. Just see exactly what is happening. It's just walking inside our trend line, and you are just watching and seeing what is happening. It went out of our trend line, and you see that there is a change now because this low is already lower than the previous low. And that is how you can understand market structures. Overcomers, if you understand this, I want you to take your time to go through this and understand how the market moves. When you understand the structure, you are not going to take trades anyhow, because you will know at this point that no, I'm not going to be selling here. Even though it seems as if sellers are now in control and they are going down, but I'm not going to sell here because I know that the market is in an uptrend. So with this information, your trading is going to completely change. And so another thing that is very important that I want you to also take note of is your candlestick formation. And in the subsequent video, I'm going to show you exactly how to understand, how to read your candlesticks. Because when you look at the way the candlesticks are forming, it's telling you a message. And that message is going to help you to be able to interpret the chart. And you will know exactly when to buy, when to sell. And that is how you become profitable when you trade. If you are completely new and you don't have trading view, I'll have every information that you need to know in the description box down below. And if you want to work with me one-on-one, I'm going to have every information that you need to know down below. Go ahead and click on this next video that is going to teach you a strategy that you can start practicing from today. I'm going to see you in the next video.